We've got a couple of minutes to go, waiting for two councillors to log on. Do you make it time to start, Ellie?
Yep, I make it at 6:30.
Okay. Welcome to the Audit and Accounts Committee for Monday, the 23rd of November. I'll just read out our virtual meetings statement before we start. I am Councillor Gardiner, the Chair of the Audit and Accounts Committee. I would like to welcome everyone to the meeting, which is being held virtually and in accordance with the Council's rules of virtual meetings, which reflects the recently published government regulations. The meeting is being streamed live on YouTube, will also be available to view after the meeting is finished. Councillors who sit on this committee are identified by name on the screen. I will introduce the officers by name before they address the committee. Councillors are reminded, although this meeting is being held remotely, they are regarded as being present in a meeting of the Council, and they should observe the normal rules of behaviour under the Member Code of Conduct and not allow members of their household to distract them during the course of the meeting. Can members ensure that their mobile phones are now switched off or on silent? Members of the committee will turn on their video link during the meeting and keep their microphones muted unless they have been invited to speak by myself as the chair. Members are reminded that if they switch off their audio link or move away from the camera, they will be treated as leaving the meeting and will not be able to take part in any vote taken on the item under discussion. Members can indicate their wish to speak by raising their hand, which they can do either physically or electronically when they wish to speak. The officers present will only switch their video link on during the items that they are presenting or where they wish to be invited to speak by me as chair. As chair, I will confirm the name of any visiting speaker at the appropriate time in the agenda who will address the committee by audio link. Councillors should declare that they are leaving the meeting and switch off their video link if they have a disclosable pecuniary interest or other personal interest in an item on the agenda. The councillors can switch on their video link when I call the next agenda item. Voting will be taken by roll call. I will confirm the recommendation proposed to the committee before the voting begins. Can each member indicate whether they are for or against the recommendation or whether they wish to abstain? Hopefully we'll not have any IT problems, but can I remind councillors if their connection is lost, they should immediately advise the Democratic Support Officer and use their meeting link to access the meeting again. Thank you. Apologies for absence and substitutions. I think we are still missing Councillor Tate. Oh, Kim, good evening. We're all here. Thank you. Any declarations of interest which you wish to declare at this stage? None. Urgent matters. Due to the lateness of the reports, which are not published 5 clear working days before the meeting, I have agreed to take items 6 and 7 for the following reasons. The audit of the 1920 accounts is still ongoing, and the finance teams and external auditors are working at pace to complete the audit before the 30th of November. In order to provide the very latest position on the accounts and the auditor's report, there has been a delay in providing the reports to ensure that the latest up-to-date position can be reported. If you look at item 6, I think it's page 45, it does say that the report was presented in September, This is in fact not actually correct. It was the 18th of November when the report was received, hence it's an urgent item. Minutes of the meeting held on the 26th of September. Anybody wish to raise any items of accuracy? They can be taken as accepted. They are taken as accepted. The recommendation tracker. Many thanks to Ellie for keeping that up to date. And a thank you to Martin Jones for today's email, which was an update on item, well, I say an update on item, it was an answer to item 1. However, Martin, I don't know if you have anything that you wish to add at this stage to give us a more up-to-date position.
Yes, thanks, Councillor Gardner. Yes, the update that I sort of presented today was what was requested in the minutes, which was a up-to-date situation of the arrears as per the 1st of April, which, as you all gather, was at the beginning of the pandemic. The situation has got more difficult for tenants to trade, and we have entered into sort of numerous rent holiday agreements and alike since then, to assist sort of many of the tenants on the way, especially in the sort of retail sector. And we need to do sort of further work to come up with precise numbers, as it's a very fluid situation with money coming in all the time. Thank you.
Thank you for that. While you're there, is there anything you wish to add to any of the other items which were still ongoing, which were down to you?
Yes, JLL have now been appointed as property advisors to the council, and they'll be sort of invited to the sort of next meeting to sort of present.
So that will be the January meeting.
The January meeting.
Thank you. Right, the internal audit progress report, we've had a reply on that. And the review of the corporate risk register, we've had a reply. Regulation of Investigatory Powers Act, we've had a reply. Regulation of Investigatory Powers Act, annual review of policy, we've had a reply. So I think everything else is okay for now. So moving into item 6.
Sorry, Mr. Chairman. Mr. Chairman, am I allowed to ask a question with regards to the response that we had from Martin?
I'll take that from you, Honorary. Councillor Cubitt.
Okay. When you went through the tracker, did we get a response from Martin about the cameras site?
I think Sue Curden was dealing with that, but I can come back to you on that.
Okay, because I mean, I probably missed it, but I didn't think we'd had a response to who took the decision to. I mean, obviously it's redundant now because apparently Hampshire County Council is not going to take that land for a road. But obviously there was a moment when we were going to render that asset have zero value because we were giving it to Hampshire County Council for free, and I just wanted to understand the decision-making processes. With regards to your comprehensive report response of this afternoon, which we received, there were a couple of tenants in arrears relating to our investment portfolio, and I just wondered whether we'd done we had a credit evaluation when we were acquiring those secondary market assets to tell us whether we were buying investment properties with tenants that were of a certain caliber of investment ranking. So that's the first question.
Okay. In answering that, I can say, as part of the due diligence and the reporting that we do before we actually acquire property. We do thorough checks, including Dun and Bradstreet's, and sort of more intrusive checks as well, regarding the trading sort of nature of the businesses and the industries they're in. We also look at the payment histories of each and individual tenant from the previous owner of those particular sites. We undertake site visits and chat to the tenants just to, for example, if they could have a break clause, to establish if they, are likely to exercise those or not. And we also sort of in touch with a lot of other landlord groups to establish sort of trends in the markets and any sort of problem tenants and matters of that nature.
And just quickly, sorry, Ms. Chairman, just one supplementary to that. In the event that we end up not being paid for those rents on those investment properties, what impact is it on the yield on those two investment properties? Does it wipe out our yield altogether? What does it do?
Well, it would depend on the quantum of sort of arrears that is sort of in question, whether you get it all back or some of it back. You would revert to if the tenant did go bust and vacated, you'd look at what is the expected rental value of that particular property and work the rent out accordingly. As far as the precise implication on yields, it is difficult to sort of make that call.
Okay.
In a broad sense. Yeah.
Oh, thank you. Thank you, Mr. Chairman.
Okay, item 6. Sue Curden, do you want to introduce that, or can we go straight to Maria Grindley?
It's not my item, Chair. So you can go straight to Maria.
Right, Maria Grindley, welcome.
Thank you, Chairman. So if I can just introduce the report, and quite rightly, thank you for picking up that point on page 43. We brought the report initially to the committee in September as a initial draft report, and we've updated it up to November. Whilst the audit has been underway, and as you quite rightly say, we are still now working hard to get the audit over the line for the 30th of November. What I'd like to do is ask Larissa, who's the manager on the audit, to just bring the committee up to date on things that have moved on since the report, but indeed just to update the committee on the final bits that we're tying up in the coming few days.
Okay.
Good evening, everyone. I'm going to present the summary of the progress of our audit, which you will find in the supplement to the agenda. If you check on the council's website, and I'm going to start on page 8 of that supplement, which is page 6 of our report. And this is a very brief summary of the main areas of focus and the findings of our audit so far. And I'm just going to start with the second item under significant risks. And this is with regards to the valuation of property, plant and equipment and investment property. Would like to emphasize that the council included a disclosure in the accounts with regards to the valuation uncertainty around valuation of these items, which was a result of the valuers' disclosure in their report. And this is likely to result in an emphasis of matter in our audit report, which is something that we use to draw the attention of the readers to certain items in the accounts that we consider to be important, and it is not a qualification. The next item is going concern. So although the draft accounts disclose the statement that the accounts are prepared on a going concern basis, we consider necessary to disclose more detail behind the assumption of going concern with regards to financial resilience, and that has been agreed and adjusted by management, and it is under our review at the moment. And the last item on this page is with regards to the estimation uncertainties on pension liabilities. And on this item, we want to emphasize the two findings. One is around the new ruling, so-called Goodwin, which was an event after the reporting date. And it indicated towards conditions that existed at the reporting date. So we had to assess the impact on the accounts. This resulted in a judgmental audit difference of 497,000, as you can see, which I want to emphasize, it is a judgmental difference, and it's estimated based on the preliminary figures provided by the actuaries and not based on a detailed calculation performed by the actuaries on the basis of materiality. And the second finding is with regards to the I would say the devaluation of the pension fund's assets. So just for a brief background, the actuaries calculations take place before the reporting date, before the 31st of March. And due to COVID-19, the pension fund has seen some drop in asset values, which resulted in an increase in the pension liability and in the accounts of the council. And this impact is an understatement of the liability in the range of £850,000. Both of these adjustments have not been recorded in the accounts, and we are reporting them to you as part of this report. Moving on to the next page, I will brief you in more detail regarding the open items on the audit. However, I want to discuss now the audit differences. There were two major corrected audit differences. One is with regards to the investment property under construction basing view. We identified that it was understated by £4.6 million, which is due to the difference in the timing of valuations. And the second one is with regards to the misstatement in the fair value hierarchy of the pool property fund CCLA in the amount of 9 million, and both of these misstatements have been adjusted in the accounts. The two uncorrected misstatements relate to the pension liability, which I described above.
Can I ask a question on that pension liability? Because although they're individual items, when you take them together, they're both affecting the same valuation. It still comes slightly below the materiality limit, but it's getting a bit close to it. What was your view on that?
Yes, so you correctly noted that it's slightly below the materiality. And as we stand now, we don't expect a qualification resulting from these misstatements. Management's assessment is that they're not material enough to deem adjustment in the accounts.
Okay, and if they were adjusted, it would be a charge against reserves, not against revenue.
I think this is something for management to comment.
Okay, carry on.
So moving on to page 45, it details the status of our audit, and there have been updates since the date that we prepared and submitted this report, so I will update you now. On the valuation and in general the procedures on PP and IP, we have substantially completed the work. There are a couple of documentation clarifications we're working through with management, but it has been substantially completed. And the next item, we still have a few things working through on debtors, creditors, investments with management. Income and expenditure is just a standing item in case any findings come up from the procedures we were currently finalizing on the balance sheet side. And non-material notes have been completed from our side. Value for money is still under our review, and a whole of government accounts is being finalized, and the last two items are regular items that are completed upon sign off.
Can you just remind us what work is still to be completed before the accounts are ready for sign off?
So as I already listed, we have a few items under review and a few items we're working through. This is the detailed list of areas that could be affected. Currently, we don't have major discussions on major items. It's more work around documentation and making sure our file is ready to go.
So it's more to do with your file than the actual accounts themselves. Nothing's likely to change.
I think if I can come in, Chairman, just to clarify. So what we're saying is that there are a few bits that are still being tied up in these areas, and then they will be subject to review. So we're not expecting any significant changes as a result of that, but until I've completed my review and raised any questions I might have on the file, I can't give you 100% guarantee, because clearly I haven't reviewed the detailed work in these areas yet. But as I say, we are working very closely with your officers to make sure that we can tie up the final bits.
Any idea of exactly when you'll be complete, rather than prior to the 30th of November?
At this stage, no, because it will depend on when we get the final bits across and we're able to complete our review and tie up the work.
Okay. Is that the end of your presentation?
Yeah, happy to take any questions.
Right, any questions? Right, I can see a hand going up from Honolulu. Councillor Cubitt.
Thank you very much, Mr. Chairman. I have a number of questions, but firstly, the accounts are for the 31st of March 2020. And you mentioned the misclassification of the pooled property fund. And the original investment, which actually only took place in December last year, was for 10 million, and you're recording it as a 9 million. And I just wondered why you're only flagging that, because as at the 31st of March, of all our external fund investments, we've taken a hit of £4.7 million. And I'm just wondering whether, I mean, obviously since September, there's been some recovery, and the only fund that seems to persistently be going down and has now lost 1.5 million, maybe a bit more actually, is the very recent investment, the CCLA Local Authorities Property Fund. But nonetheless, this is an account as at the 31st of March. And I just wondered what the normal requirement is with regards to registering a 4.7 reduction in the valuation from the original investment to the current valuation. That's my first question.
And who's it aimed at?
To Adsnia. Because they refer to the pool property fund and they refer to it as 9.
Okay. Maria Grimley, I think
and they refer to it on page 8 as well, the pool property fund. But of course, there was a total external fund investment of 80 million, and as at the 31st of March, it's registering 75 million valuation.
Okay, all right, that's the question asked.
Okay, so I'll start, but obviously Larissa, do come in if you want to add anything. But the item that we report in our report, the 9 million, is an item that was misclassified. So that was the item. So in sampling and testing, we obviously identified this item as being misclassified, which is why we've required it to be amended.
So,
I'm not sure, Larissa, if you want to add any more.
So when you say, so you're not registering it because it's already taken a 1 million hit within a 3-month period. You're actually, because we bought the fund, we invested in the fund as at 31st of December for 10 million. So you're saying 9 million and you're only registering it because it's a misclassification, not that it's taken a 1 million hit in the space 3 months.
Yeah, I'm basically looking at your statements and saying, are the items within there materially correct as at the 31st of March? And so what we're saying is, have they been properly classified within there? And we've identified this 9 million was incorrectly classified. So we've required it to be classified correctly in the accounting statements.
Okay, do we need to know in what way it was misclassified then?
So in the note in the report, it was classified, it was as level 1 instead of level 2 fair value.
I think that's quite clear in the report, Anneli.
Okay, so the next question then relates to, sorry if you don't mind, relates to the relationships. You flag up the many down. I can't remember what page it's on. And I'm just unsure as to why you only refer, yes, here, the value for money risks, significant risks. And you talk about the partnership with Urban and Civic. But I wonder why you're not referring to our significant risks with New River and the leisure park at this juncture, and nor are you looking at the significant risk with regards to our partnership with Muse and Basing View. Is there a reason why this only relates to the many down, please?
So this was when we undertook our risk assessment, we identified many down as a specific area that we wanted to focus on and complete more work on, and that's why so when we brought the audit plan to this committee, many down was highlighted in there as the area we would consider, and so that's why we've continued on that route and considered many down as part of our value for money under the 2 aspects of the value for money work that we do, one in working with partners and other third parties, and the other around taking informed decisions. We don't look at every single relationship that the council has, but this was the one that we identified as part of our planning processes. It was brought through to the committee as part of our plan at that point. We did raise with this committee this would be the area we would look at.
I recall, and in fact, to be honest with you, I have raised all 3 of those partnerships each time, because whilst other councils don't have huge projects like we do, I think I flagged to you and your predecessor that these are 3 very large, high-value projects, and they're not insignificant. I mean, I think the development agreement is what, 350 million. Which for ordinary councils would probably be considered to be a very large project, I would imagine. So whilst I appreciate that we've discussed many down, I believe, I don't know whether other members can back me up on this, I have actually raised that I think as an auditor, we would like the same evaluation that's been done on the many down to be done on New River and the leisure park and on Muse, because they represent huge amounts of money.
So just to be clear, from the point of view of our audit code and what we are required to do, we will look at, so we risk assess and identify areas that we're going to look at in order to get our assurance for my value for money conclusion. if there were other works that the council wanted to do from the point of view of audit, I would direct that through to your internal audit. I would not necessarily look at every relationship, every project you had underway. I would look at what I felt to be an area that would give me the assurance I needed, or indeed would identify issues and risks. But that doesn't mean that I'm going to look at every joint venture or relationship or third-party agreement that you have.
Sure, no, and I'm certainly not advocating that, because obviously we have a lot of third-party relationships, which I haven't mentioned. I'm just mentioning those two other ones in connection with size and in connection with the sector.
I think Annalie's point is probably a valid one, because they are areas where there is a large amount of risk, and therefore that risk could well be material, and therefore the fact you haven't looked at it is a bit of a worry.
As I say, Chairman, we did bring our plan to this committee to show what we were going to look at. We don't, as I say, have to look at all significant relationships that you have, and we've certainly looked at many down in order to give us some idea as how your processes are working and how the arrangements are in place. But we are not necessarily required to look at all the kind of key relationships you have, or indeed those that you would like to be looked at. That's not our role or a requirement of us. Obviously, you know, more than happy as we bring our plan for the coming year to committee to have that discussion again with you and look at what we may need to consider. But for my value for money conclusion for this year, I'm comfortable that the work we've done has provided the assurance under the code and the requirements of me under the value for money conclusion.
Okay, I think, Annalie, if we put that on the tracker as something to look at next year.
I'd really appreciate that, Mr. Chairman, but I also would like it minuted that I have raised both before. So this is not the first time, and I certainly understand what Ernst & Young is saying in that they can't possibly do it for all our partnerships, but I certainly wasn't requesting that they do that either. These were just big ticket items, they were big property items, they are ones which involve a huge amount of risk, and this is not the first time I've raised them. But other than that,
I think we can rely on Ellie to minute that.
Thank you very much.
Okay, any other questions?
Are we going to are we allowed to ask questions about the accounts as well, or is that another?
That'll be on the next paper.
Okay.
It doesn't look like we have any other questions. So thank you very much to Ernst & Young. Thank you, Maria. Thank you, Larissa. You've done a splendid job up to now under very trying circumstances. One thing I will raise, though, is the fee. Have you got any idea at this stage what you'll be asking for?
Not at this stage, Chairman, but we want to complete the audit and see what that position looks like once we've tied everything off, and then at that point we will bring the fee back through to this committee. Clearly the fee will also go through to PSAA, and they will kick the tires on that, and obviously it goes through them for agreement as well. But I will ensure that you are cited on the fee and the breakdown of that fee.
One thing you probably are aware of, though, is your audit cost. You must have that on a real-time basis in terms of hours worked. How much extra work has been done?
So I don't have that information in front of me, I'm afraid. We are obviously heading fast towards deadline, which is next Monday, and then during the week next week we will be pulling together the position on each of the audits in order to understand what the actual impact is. But
Okay.
at the moment I'm asking my managers to focus on getting the audits over the line rather than analysing the hours and fees at this stage.
Interesting. Thank you very much.
Sorry, Mr. Chairman, the agenda item number 7, is that not with Ernst & Young then, if I have any questions on that?
No, that will be down to our people, the officers. If you've got any questions regarding the audit, now is the time to ask. The accounts are our officer's responsibility. So is there anything further you want to ask? No? I think your screen's frozen, Anneli. No, you're still there. Okay.
Sorry, I thought you were talking to the other members.
No, I was talking to you, Anneli.
Sorry. No, I've asked all that I wanted to.
Thank you. Okay, I think we can now move on then to the next paper. And I think that one must be down to Sue.
Thank you, Chair. So Suzanne James and Sarah Finch are attending this evening to take members through the changes to the accounts from the management's point of view, and also to highlight the changes in the accounts themselves. So I'm going to hand over to Suzanne first, and then Sarah will come in as appropriate.
Thank you.
Thank you. Good evening, everybody. The statement of accounts was prepared and published at the end of June, as we advised you at the last meeting, and I can confirm there still remain no questions from the members, from any member of the public. Clearly, we've just heard from Ernst & Young on the work that they have done, both up to the September committee since then, and also some of the bits that remain to be concluded. Which I think is the conclusion of their reviews, their final documentation, and there is still some ongoing work with signing off the ongoing concern, which is the COVID-19 impact. As Ernst & Young and Maria said, not expected to have anything significant that impacts on the accounts at this stage. There has been a revision to the value of an investment property under construction. It's reduced the total comprehensive expenditure by 4.6 million and increased the balance sheet by the same amount. Section 3.2 touched on the matter that was raised earlier with regard to the property fund being categorised at level 2. Section 3 highlights the two uncorrected audit differences based on the auditor's assessment of the pension fund, as Larissa outlined for you. And Appendix 1 details all of the changes to the pre-audit accounts that were issued in June. And for ease of reference, those have been highlighted in yellow throughout the statement of accounts as Appendix 2. There are some other wording changes. There are 4 of those. The first one being that we restated the 18-19 actuals in the comprehensive income and expenditure statement on page 20 and note 1. The expenditure and funding analysis are, sorry, excuse me. The expenditure and funding analysis on page 24 has reflected the new portfolio structure, which obviously took place in 2019. The second one I'd like to pull out is note 4, other long-term debtors on page 30. And this is around explaining that the loans to the housing association are held at cost, as it's not possible to do anything else. It's not a change, it's just a clarification. The third item is note 7 in the financial instruments classification on page 31. And this clarifies that the loans to the housing association are classified as fair value through the profit and loss account. Again, a clarification. And the last one I want to draw to your attention, note 13 for government grants on page 37. And this explains that the 18-19 actuals have been increased to include the £500,000 discretionary housing grants that were previously omitted. If there's any detail on any of those, I know Sarah will be able to pick them up in more detail for you. Clearly, the paper here suggests that as a result of the amount of work that's outstanding, that you are requested to approve recommendation 3 to delegate to yourself, Chair, in conjunction with the Executive Director of Corporate Services, the sign-off of the accounts following the completion of the auditor's work. Our hope is that it will be in good time, and clearly you've already raised that question. Those are the items I was wanting to draw out to yourself. I do think we are on the final stages of this, and a lot of work, hard work and effort has been carried out over many hours and a good deal of pace. So with that, I will draw my comments and introduction to a close.
Well, thank you for that, Suzanne. I think the majority of changes through the accounts were the valuation adjustment, 4.5 million, which rippled all its way through. And of course, we've got a new note 29, ongoing concern. Now, explaining the going concern assumptions is usually not something that's disclosed. Is there any particular reason why we felt that was necessary this time?
The reason for that this time is it's been a requirement because of COVID-19. So you'll be aware that not every local authority has the same strength of financial position as Basingstoke and Deane does. And all authorities have been asked to do that. So it's not something that we've chosen to do. It's a requirement on us due to the change of circumstances that the country finds itself in at this time.
Okay, which obviously came about after the first run of the draft accounts. So that makes perfect sense. Anybody got any questions? Councillor Cubitt, I'm sure you have.
If I can ask some questions, I'd be very appreciative.
I wouldn't like to stop you.
Okay, what I was just wondering is whether you could just show me where the EM3 loan sits on either the notes or the accounts, please. Because when I was flicking through it this afternoon, I couldn't see it. I'm sure I was being stupid.
I doubt it. Somebody like to explain that to Councillor Cubitt?
Sarah, are you able to draw on that for us?
Yeah, thank you, Chair. Thank you, Councillor Cubitt. The loan actually drawdown was made during 2019-20, but the actual loan doesn't come into place until the 1st of April 2020. Therefore, in the accounts, it's shown as a receipt in advance, but it doesn't appear as borrowing or a loan until the 2021 accounts. So
and there's no obligation. I mean, in normal accounts, once there's a commitment and a signed agreement, is there not an obligation to have it in the notes somewhere?
It sits in the balance sheet in creditors as a receipt in a receipt in advance.
Talk me through the page, please.
Yeah, in the balance sheet, it sits in creditors.
Okay, the 30 million.
It should be in part of the 30.2. And then there's a creditors note. I don't believe that we've specifically drawn out the value of the 2.2 million as a receipt in advance in the notes.
Did we have to pay an upfront fee for that loan? Was there an upfront fee that we were charged?
No.
And so there's no drawdown fee, no commitment fee, no nothing fee?
No, nothing.
So the only costs that are affected exclusively once the drawdown takes place?
Yes. Yeah, which is the 1st of April 2020.
Okay, that's quite unusual. I mean, certainly from the finance world, you'd have a commitment fee for a loan. So I'm amazed by that. I'm not disputing it. I'm just saying that's unusual. In terms of page 108 of our supplemental, or page 43 of your accounts, again, I'm sure I'm being really stupid, but I can't understand why the revaluation of pooled fund investments is in brackets as a surplus when we know that year end we had a 4.7 million loss on our investment funds. non-realised, obviously, but book value. It's under section 15, usable reserves.
I might need to come back to you on that one and just work it through.
Yeah, brilliant.
So
I tried to call someone today when I
Yeah.
went through the accounts. I wasn't planning to spring it on you, but I couldn't get hold of anybody. Right. So that's it. And then the revaluation of investment property on that page, which is a deficit of 1.4 million. Could you talk me through what that relates to? Again, I'm sure I'm being stupid.
On page 29 of the accounts.
On 43 of the accounts.
Yeah, that's the movement in the unusable reserves. Note 3, investment property, explains the 1.4 in a table. It's on page 29.
Okay.
Okay, and then
so there it's down as a net gain.
it's a gain. Yeah, it's a gain. And then you've got the significant investment property sort of site areas. So that gives you the breakdown of the overall gain of 1.4 million.
So it's a gain, but then on the usable reserves it's down as a deficit. That's why I'm being thick. It's obviously purposeful that it's inverted on this then, but I don't quite understand why.
On the page 43 is the usable reserves, and the first column is the impact on the general fund.
Yes.
And any capital accounting or property valuations are not allowed to fall to the council taxpayer, so therefore it gets charged to the general fund but then reversed out as a statutory adjustment, which is why against the general fund it will show
as a deficit.
And then it will pop up again. It pops up again on page 47.
Whereas the revaluation of pooled funds is a chargeable account, so that gets charged to the taxpayer. So the 3.5 million loss is in there as a surplus.
Is it all right if I have a think about that one, Sue? I don't know if you can.
Yeah, so obviously so the valuation of any of the funds at year end, we have a statutory requirement to reverse them back out again. So it doesn't actually impact on the taxpayer at that point. We look at the valuation of any funds when we actually come to dispose of them. And at that point, if there is a profit or loss, they would then get written back to the general fund. But at the current time, our fund values are in and out of the accounts. So picking up your point around the CCLA, obviously we purchased it in December. We noted at the time that there was a cost, there would be an immediate drop in the value as part of that purchase, which is why it's a multi-year investment, not a short-term investment. And I think about £800,000 of that revaluation is linked to that. And the fund obviously is on track. It's maintaining its income stream. But in terms of the accounts, it goes in and it comes back out again.
Okay, I have to say I'm a little confused, but I'm sure I've dominated enough already. Thank you very much, Ms. Chairman. Now I'm
Honestly, can I suggest you take that offline and discuss it tomorrow?
Yeah, I'm clocking out on this one. Thanks.
Okay. Has anybody else got any comments on the accounts? Councillor Harvey? Paul?
Thank you. If Anneli gets to the bottom of that with the officers, could we have a response to all members? Because I would appreciate that too, actually, just trying to listen and follow in terms of where you were going with that, Sue. I'd appreciate that.
Yeah, Ellie, if you can get that on the tracker and make sure that members get an answer before I'm about to say the end of the week, but certainly before the 30th of November when we sign off.
Yep, that's noted.
Okay. Heading back to page 51, the recommendations. The committee approved the statement of accounts for the year ended 31st March as set out in Appendix 2. I think the caveat to that is as they stand at present. But apart from that, I think we can approve them, subject to the outstanding question from Anneli. Okay,
Sorry, I'm sorry, Mr. Chairman. Just I had promised the clock out, but there was just one other thing that I did want to ask.
please do.
In view of the leisure park and the valuation of the leisure park in relation to these accounts and the delays to the proceedings of the development agreement, is there any impact on our balance sheet or our profit, our income statement with regards to the leisure park in these accounts?
Right, one for officers.
Thank you, Chair. Thank you, Councillor Cubitt. I would say there's no impact on the 31st of March 2020 valuations on the redevelopment of the leisure park.
That would be my thought as well.
And did we have it valued by any external valuers? I mean, we're assuming that it is unchanged, that everything is ceteris paribus?
Yep, all of the all valuations, apart from Many Down and the one Basingview one that we've already mentioned, they were all done externally by Colliers International, and based on information that and records that we would have passed over. Our internal property team would have passed over all the inputs to perform those valuations.
Thank you.
Okay, getting back to the recommendations. Recommendation 1, does the committee approve the statement of accounts as it stands? Just raise your hands. Okay, no dissent. The chair of this committee meeting is authorised to sign the statement of responsibilities to that effect. Will you leave it with me to get back to you should there be any substantial change? But as they stand at the moment, I can sign. No dissent. All right, I think that covers recommendation 3 as well. So just leave it with me. One question for officers. I'm supposed to sign these accounts. Just how do I do that?
So what we'll do is we'll get a copy of the information over to you to sign, and obviously you can then advise when we can release it.
Okay. I look forward to that. Hopefully we can get everything in place for the 30th. So,
I think you've hit the mute button.
Councillor Gardner, you're still muted.
I haven't realised. Right, annual property plan, half-year report for quarter 2, 2020-2021, draft report, property investment strategy, annual property plan 2020-2021. And that is being presented by...
So Martin will be presenting it, but I note that the portfolio holder is here, so I don't know whether he wishes to speak on it first.
Councillor Isaac.
Yes, good evening, Chairman, and good evening, councillors.
Welcome.
And officers. Yes, well, as the accountable cabinet member, I'll speak to it. This is a half-year report on the property plan, and what it records is that the £30 million that was allocated to in the property investment strategy in 2017-18 with a view to obtaining higher income has been successfully invested. That's to the tune of just over 23 million, I think. That's been completed to date, which has given us an increase in rent of 1.7 million per annum, which is showing an initial return before transaction costs of 7.4%. And once the new HQ for Eli Lilly is completed and we receive the income from that, we will be the rents we'll be receiving from the money that we invested will be £2.31 million, which will show a gross yield of 7.1%. So the focus of the property team looking ahead is very much on making the property portfolio work harder. You know, we've got a property portfolio that's valued at something like 280 million, which is producing 16.3 million or thereabouts per annum in rents. And so it's important that we make sure that we're actively managing it, that we are looking to concentrate investment on the best investments and look at those investments which are not performing well or which are rather small and management intensive, that we look at how best to dispose of those. And that's something that the property team is now very much concentrating on. The other area of work for them is that clearly with a property portfolio that's got over 200 properties, it's important that we are making sure that we operate rent reviews and look at opportunities to restructure long leases with head lessees who want to invest, so that we can continue to improve and increase the income from the property portfolio. And that's again something that the officers are working on at the moment, on Basingview, on Danes Hill, on Hounder Mills, and on the Viables. So as part of this, of the effort that goes in to make sure that property continues to perform well for this council, we have retendered our property advisors, and as a result of that competitive tendering process, JLL have replaced Cushman and Wakefield. You're going to be seeing them, I hear, in January, and I would just say that I think they've made a very good start. I'm impressed with the quality of the people that they've allocated to our work. They have done some initial work reviewing the property portfolio and as a basis for analysing it, and as a basis for then developing the recommendations that they wish to make to us in terms of the better management of the portfolio. So I expect you'll get some insights from them when you see them in January on that count. But I think it's reassuring that the findings that they have is that we have a stable and relatively secure property portfolio, and that we're well positioned in that we have quite a heavy weighting in industrial property, which at the moment is performing generally well during the COVID crisis. It's not to say that there aren't areas that need attention, but the general weighting and thrust of our investment is strong. But there's a lot of work to be done, and no doubt we'll be reporting that to you in the time ahead. I think that's probably all I need to say, other than the comment that we have been looking to help with Sue Curtin and the finance team, looking to help the business tenants of the council with rent holidays and monthly payments and so forth. And that's something that we'll keep a close eye on as this pandemic continues to impact upon the businesses in the borough. Thank you very much.
Thank you, John. John, at the moment we've got 32.49 of our 30 million are committed. 2.49 will be funded from future capital receipts, as will any future purchases. Are we actually looking at any new purchases at the moment in parallel with disposals, or has that just been frozen?
Well, that's a good question, and the answer is that we are continuing to monitor opportunities, bearing in mind that that one of our approaches in investing the 30-odd million was to invest locally. We are keeping an eye on opportunities that emerge in Basingstoke and in the borough generally. And so yes, there's if there were a particular reason why we should there would be a case for investing in a further property. That's something we'd need to look at.
Thank you. Right, any questions on the paper? Paper is for noting and comment. It looks like we're happy with it. So, no, Councillor Cubitt, I would have been surprised if you hadn't asked a question.
Sorry, Mr. Chairman, it's just that I'm using the electronic hand, and the next person who wants to speak is also using the electronic hand. I think maybe you don't see the electronic hand. So that's why there's a bit of a delay. Anyway, thank you very much, Mr. Chairman, for letting me ask a question. And thank you, Cabinet Member, for attending the meeting. You used a phrase which is very important, and it is that you refer to the return as a gross yield before transaction costs. And I wonder whether you could disclose to us what the yield is once transaction costs have been deducted. And then my supplemental will be in relation to the transaction costs that are emanating from the loan with Eli Lilly and the impact that that will have on the yield on this portfolio. Thank you.
Right. So I can't answer that here and now, but I'm sure with some help from officers we can answer those questions. There are transaction costs when you're buying and selling property, inevitably, as you know, and but what I would say is that we are very attuned to the need to make sure that we're getting value for money, and that's why we are competitively tendering. And it's one of my mantras consistently with officers. I'm asking about what is it we're paying the consultants for the work that they're doing. So I'm very on it because I accept that we are custodians of public money, and we've got to make sure that we get value for money for our residents. But I'm sure that if I asked Sue Curden nicely, she would provide, or one of her team would provide that information for you on the impact of the transaction costs.
Ellie can add that to the tracker. Right, looking at the electronic hand, I see we've got Councillor Gavin James. Gavin.
Good evening, Chair, and good evening, John. How are you? You look well.
Yeah, no, I'm fine, thank you very much. Well, I'm not actually. I've sustained a rifle wound.
Oh, okay.
Oh, Councillor hasn't got himself in the foot then.
Yeah, I was a little bit confused with the report in terms of it talked about the property investment strategy, the 30 million. You remember years ago we discussed that when there's a map of just you and me on it, actually. I think it's working well, it's performing well, almost a concern that if we leave ourselves capped at the 30 million we've invested all that now, is there growth in there that if a great opportunity comes along, we can just tap into that if it's going to generate returns? Because the property investment strategy was all about generating returns primarily. But then you started talking about the overall property portfolio we have. And obviously, as a council, we own property for a number of reasons. Now, this particular fund, the property investment fund, is about generating revenue. The other property, some of it we hold because it's got a social value. It's got a benefit that isn't necessarily financial. And I'm a bit concerned with JLL, if they're looking after both, are we going to be able to keep these two separate? And we're not going to start looking at property that we own that has a great social value. And I'm thinking of, there's certainly an area of housing in Brookvale, which perhaps doesn't generate a massive amount of money, but actually is very socially useful in terms of the people who live in there having that security. but also there's probably other sites around, because clearly if you look purely at finances, you'd ditch every community centre we own, and we're never going to do that, are we? So how do we keep these lines sort of separated? And is it time to really look at this property investment strategy, the actual fund, as a separate beast, put more money into it and say that's for profit, the rest of it we're just looking because it's got a social value? How are you going to make sure JLL don't look at this purely with a corporate head, because obviously we are a local authority?
Well, because we're in charge fundamentally, and we're not a property company. We're a council that happen to have a large number of properties, and therefore absolutely we will any property that we look at we will always take account of those sort of important characteristics on the social side, community side. And I think actually if you look back at what we've done with a number of our property holdings, we've where sites have been freed up, we've been very ready to allow minimal value to attach to them in order to enable affordable social housing to be developed by RSLs, and so nothing will change in that, and so we're JLL are our servants, so it's not a problem.
Thank you, Chair. Just a supplementary, it's reassuring to hear. I'm just concerned sometimes I think we all need that sort of, we're likely to go with passion rather than actually having a logistical sort of look at a logical way of analysing whether we should hold a property or not. Section 2.8 of the report talks about work will continue in collaboration with JLL to provide a benchmarking and performance indices for the property portfolio. And then it lists a number of things that all look very much sort of the commercial headed kind of things you would look at in terms of yield and rents, etc. How do we, so if that's what they use, I mean, when does it come to committee about how we measure the value of a property? Because obviously as councillors, we look beyond financial.
Yeah, sure.
When does that come into committee?
Well, I know that Sue wants to come in, but I'll kick off. In most cases they're not income producing properties, the community properties, the social properties, so they wouldn't form part of the index. So it would be exclusively on the properties that we hold for investment income purposes, I guess. But Sue, is there anything else you want to add?
Thank you, Councillor Isaac. So part of the benchmarking information was requested by the committee on several occasions in terms of wanting to understand, particularly around the property investment strategy, how they were performing against the kind of the wider indices nationally, and also in terms of when we, as John says, when we go through the entire list of assets and identify our purpose for holding them, if we are holding them for an investment purpose, how do they actually link into those benchmarks? And therefore, from the point of view in terms of an investment opportunity, if we find that actually benchmarking them finds that they're not actually giving us the returns and therefore not making the capital work for us, it may well be one of the deciding factors in terms of making a recommendation for disposal to generate income to purchase other investments. So it's just one strain or one strand of the activity that JLL are looking at us, but it was also linked to very specific requests from the committee themselves.
Okay, Councillor Votes, you had your hand up.
Thank you, Chair. Two, what I think are small things that I'd like a bit of clarification on, please. On page 27, para 4.4, it talks about commercial rental income forecast at Q2 to be a shortfall of 0.32 million. The rest of the paragraph talks about, quite rightly, the risks relating to COVID and how difficult it is at the moment for tenants, and the possibility that some people may default and that kind of thing. So could I clarify whether that is part of the forecast? Has there been an estimation within that forecast of those areas, probabilities of people who are unable to pay, or is that something that we're waiting to materialise? And then a second one on climate emergency, and the next page on 411, it talks about the property investment strategy aiming to have a positive carbon impact. And I wonder, it talks about maintenance and repair plans, and I just wondered if we could be given a couple of examples of what that might mean in granular terms. Thank you.
Sue Curtin had a hand up there. Sue?
So in terms of paragraph 4.4, obviously that change in commercial income is not related specifically to the property investment strategy properties. We're not expecting a shortfall of income on the 32.49 when it's fully invested. That's on the other performance of the overall portfolio. So yes, that is part of the monitoring that we've been reporting to Cabinet and Council, that there is an expectation in the longer term that rather than just a cash flow impact from COVID-19, there may well be a series of activities that will result in either a void or a loss of income. So that 0.32 is what we're reporting as part of our information to central government in terms of the longer term position, and so therefore it is included in the monitoring reports themselves as a potential pressure to the council. In terms of the climate change, I think it's more of a generic statement in terms of whenever we undertake any activity as a council in terms of repair and maintenance on our buildings, we would look to use the most appropriate materials, appropriate sources of suppliers and contractors, and wherever we can, we would look to try and mitigate any potential climate change issues. So it's difficult to give a specific example. It's more of a commitment in terms of how we would like to run the property portfolio and the repairs and maintenance programme.
Can I just add something on to that second question? Yeah, because it is very important, the commitment of the council through the climate change declaration, and I think the evidence of that is where we are investing new, say at Basing View. We're very keen to make sure that the new buildings the new offices that are constructed are meet those the sort of best industry standards in BREEAM, etc. And then, of course, where we're going to make it absolutely certain that these principles apply will be in relation to Manydown, where we have a major ownership alongside Hampshire County Council. So it's more difficult where you've got existing buildings and where you've got other partners who are either long leaseholders or tenants, occupational tenants, who will have usually have the responsibility for the repairs and so forth. So it's not our responsibility. We can encourage them, but it's not our direct responsibility to insist that they do certain works to improve the green credentials of a particular building.
Thank you. Councillor Tilbury, you have a hand up.
Hello. Oh yeah, hello, Roger. Yeah, it's one I've raised before. Oh, a couple of questions. On the page 26, the investments made, obviously we've got Ringway House, Bell Road, Daneshill. Well, I think we sort of need to rename that, because obviously the first one we did with, or whoever took on the lease, was knock down Ringway House. It's no longer there. It's obviously no Veolia. I think it's Veolia's commercial waste site, where it's basically a big car park now. So I think for clarification, it's otherwise a bit like calling Rookstone Park Pruitt, isn't it? It's going to confuse people. The other one, so I've done some clarification on the B&Q one at Lister Road. We bought for 7.5 million. Is that purely the B&Q site, or does it include the land adjacent to it? There's a small industrial estate. The reason I ask is it all used to be part of the ITT factory, and I know they own the old lot freehold, but whether it was sold separately afterwards, but as I say, because I think I said at the time, the B&Q 7.5 million for the B&Q building, which is at least 40 years old, does seem rather excessive. But does anyone actually know?
My recollection, Councillor Tilbury, is that it is just the B&Q building, and That's one of the wonderful things about investing in industrial property. The buildings may be old, but they're still they still perform their function, and they're easily repairable, generally speaking. So that perhaps explains why they are they retain their value.
Well, ironically, their new factory they built at Lister down in Viables, they just knocked down the other week, the one that replaced that site. But yeah, so that didn't work out too well. But yeah, hopefully you're right on that. But it, you know, B&Q does look a bit of a. It's hardly well, it's just a box basically, isn't it? But yeah. Yeah, I would say because obviously, if it had been both parts of the site, obviously there'd be, you know, there are quite a lot of companies on the other one with B&Q. You know, there's more chance of them all you're generating some income there. But obviously, if you're totally reliant on one individual company like B&Q, if they just decided to shut it, then you know there's not much else is going to fill a building like that because of the nature of it, because it is, which was the problem with the ITT factory.
But I'm very glad to notice that B&Q are trading very well at the moment because of COVID.
Yeah, ironically,
everyone's doing DIY.
Yeah, it is. Yeah, so yeah, thanks, John. Yeah, so the other one, say just a point. I think it's just it could do with updating the Ringway House one because it is a bit confusing.
No,
if you look for Ringway House, it's gone.
Absolutely,
it's still there on
correct.
Google Earth on some views, but obviously not in reality.
Yeah, I don't think it was a sad loss, Ringway House, but
no, it was. It would. That was why it was. No one was renting it, were they?
We will make the necessary change.
Yeah. Thanks, John. Thank you.
Okay, Councillor Harvey, I had a hand raised a moment ago, but you've taken it down.
No, that's.
It was relating to criteria and elements of how the JL will go about the business. You've answered that question, so it's fine. Thank you.
Thank you, Councillor. Right, the report is noted. And hello, Councillor Cubitt, my apologies.
Sorry, just following on from my question earlier about the transaction costs. Is there, I would like to make a request, and the request is this: going forward, could we have the net IRR as well as the IRR so that we get the proper picture of the true yield, please?
I think, remember,
we'll give you the net yield. We'll give you the net yield. We won't give you the net IRR.
I think that's probably what Connell is looking for.
Yeah.
So you had your hand up.
Yes, so sincere apologies to Councillor Cubitt. She did ask the question at the previous Audit and Accounts Committee when we brought property investment strategy to reattach the appendix, which we previously reported with that information. So we will include it again next time, so sincere apologies.
No worries, but just out of interest, why is the Cabinet member saying no to net IRR? If I Google what net IRR is, it's exactly what we as members would like to see. Which we've already got the IRR, and the net is fees, costs, carried interest, other deductions, which IRR would typically overlook.
Yeah.
And for investment managers, it gives you a more accurate picture of an investment's actualized potential.
So I think I'm sorry.
Go on, Sue. Yep.
I think what we have previously reported, Councillor Cubitt, is exactly what you're asking. I think it's terminology and understand and linked to terminology. But I think the actual appendix we normally give you does give you what you've just asked for.
So in the past, we've had a report on the return on the investment properties and the portfolio as a whole. Does that always include the community properties, or is it purely our investment earning properties? And if it is both, could they be broken out?
So I think it includes the investment properties, but we can have a look at that for you.
Thank you. Okay. If everybody's happy with that, we will note it and move on to item 9 and see if Paul Gundry is still awake. Paul?
I don't think Paul wants to introduce this one. Can I, Suzanne, before you come in, can I just pick up a couple of points?
Please do, yeah.
So if I can just, so Suzanne will take you through the position. I just wanted to, in relation to the earlier question around CCLA, around the valuations and how we treat them, section 6 of this report gives more information around that. So if I could direct members to that information first, and then I'm obviously happy to provide further information but I think that does explain the position that you were raising in relation to the other report. Sorry, Suzanne.
So, Mr. Chairman, just before the officers very kindly kick in, I think we're, as members, very appreciative, and I'm sad that the cabinet member for property has left, but we're very appreciative that he attended the meeting. And I just wondered, Mr. Chairman, why now that we've moved to evening meetings, why we are not requiring the cabinet member responsible for accounts to similarly attend, as used to happen when I first became a councillor 12 years ago. And I don't know what other members feel, but I feel that if you're a cabinet member and you're responsible for accounts and it's an evening meeting now, so you can't use the excuse of working, I think it should be incumbent upon the cabinet member to be in attendance.
Sue, you want to comment on that?
I suspect it's because these reports are 151 officer reports, not portfolio holder reports, but obviously it's entirely up to the committee if they wish to seek for the finance and improvement portfolio holder to attend, but these are finance reports, not portfolio holder reports.
I think that probably answers the question. I think Councillor Hunt has in the past usually attended where she's been presenting a paper, but I will have a word with her and see that she attends as appropriate in the future. Okay, Treasury Management.
Sorry, Mr. Chairman, I'm sorry. It is an issue, if you don't mind me just saying. One of the reasons why we as a council did not get caught with the Icelandic banks and we didn't get caught with the interest rate swaps was because we had Councillor Lewin, who was very involved, irrespective of the Section 151 officers' activities, in avoiding making those mistakes that were made by other councils up and down the country. And Councillor Lewin did an extremely good job, and we avoided some big areas of loss. And whilst I accept that the officer advises it's a Section 151, I do believe it's incumbent upon us as councillors to have some responsibility, if they are in the cabinet, for investment decisions from a broader picture. Because what I do not obviously want, and I'm sure none of us want, is to see us falling into cracks like the interest rate swaps of the Hammersmith Fulham farce and like the Icelandic bank loans, which we managed to dodge last time.
Sue, you got your hand up?
Yes, so in terms of process and practice, obviously council delegated the authority to me to undertake the Treasury Management strategy. We do, of course, have ongoing conversations with the portfolio holder and, as appropriate, the leader and wider cabinet, if we are looking to do a completely different type of investment than something we've done before. So, for example, I'm aware that some members are interested in the CCLA decision. That was obviously my decision under my delegated authority, but that was in consultation. Even though I'm not required to do that, it is in full consultation with the leader, the portfolio holder and cabinet more widely. It's entirely up to the committee if they wish to seek for the portfolio holder to attend, but obviously they act on, it's my recommendations, and as appropriate, as I seek consultation if we're looking to do something that's abnormal in terms of something we haven't done before. But obviously it's entirely up to the committee to make a decision whether they wish to invite the portfolio holder.
Yes, our duty is to monitor Treasury Management, not decide what it should be. But it might be useful if you did run this past the chairman of the committee as well as the portfolio holder, just in case there is anything that we wanted to flag up. Would that be a problem?
I will take that offline with you, Chair.
I look forward to it. Okay, Treasury Management is pretty standard stuff. Does anybody want to raise any questions on it?
I think Councillor Harvey had his hand raised. I might be wrong.
I'll take Councillor Harvey first and then Councillor Faulkner.
I think Councillor James was before me.
I was, but it was about the
Councillor James, if you
attendance.
insist.
Yeah, it was about the attendance of a cabinet member. I think if we're going for a very dry report, arguably if you're looking at audit and accounts in terms of just this is a factual report about where we are, then you don't need a cabinet member. If you're talking about strategy, whatever powers and decision making has been devolved down, they've been devolved down by the cabinet member responsible. There was a lot of hard work put into our current constitution to make sure that officers and councillors never came into conflict. So any decision around strategy, any decision around policy belongs to the cabinet member, it belongs to the cabinet as a one, it belongs to the leader of the council. And if I've got a problem with it, I'm fully within my rights to be able to tease that out of the relevant cabinet member or the leader of the council. What I don't want to do is to end up in an argument with an officer who is just implementing the policy they've been handed. So anything that relates to a policy that's been made by the cabinet member should be here to defend. Whether that's relevant to this paper, I haven't decided yet, but I just think that should be the clear criteria of whether or not a cabinet member is here, because I'm not going to get in an argument with you, but I'm more than happy to argue with any cabinet member anytime.
I think my request was basically not to get involved in determining the policy, but merely to know that there was going to be something new coming down the line, rather than waiting for it to happen before we monitor it. But as Sue said, we'll take that offline and discuss it. So, any questions? Oh, sorry, that was you out of the way. Councillor Harvey's next.
Thank you, Jay.
Councillor Faulkner.
On a similar line, really. I'm just picking up the point that Sue rightly said, that in a sense we've changed the constitution to allow certain amounts of delegated powers and changed it all recently. And of course, Sue's exercising her delegated authority as the Section 151 officer, but also as a finance officer in regard to the CCLA as just one example. I'm pleased to hear about the consultation above and beyond simply just what's delegated to you. I think that should be common practice and should be written into practice, because I think to protect you as the officer, but also to protect us as the members, there should be that conversation, there should be that consultation, and we should know that you have consulted. It shouldn't just be something that goes on behind the scenes. I think there needs to be some sense of capturing that you have consulted the cabinet on a decision you intend to take as one of our senior officers, so that that accountability is seen there and is transparent. And I think also there is an element of assurance that the decision that you are making, then we can all be assured, is in the best interests of the council because of that. And there's just a bit of process there that might want teasing out and thinking through that reinforces what you've already said, Sue, that just takes it onto a more substantive level, if that was possible. And I agree, the cabinet members always own reports. I would, as often, it should be the fact that a cabinet member owns a report and an officer is there to support the cabinet member in presenting the report. That should be the written rule. Of course, you have separate responsibility as Section 151 officer, and I respect that beyond members, but that's why I'm mentioning, and I'm sure Gavin and Annalise are mentioning the other aspects to the consultation and engagement, and then the reporting back to us all, really, just to confirm that. Could we take that forward in that way? Could we examine it in that? I think the issue is if you leave it to council, trying to re-engineer something on the floor of full council, if there was to be a disagreement, is difficult at the best of times, and that would be the last place you would want to seek to do it. So that engagement and almost consultation becomes really important, because you do want to move quickly, you do want to make decisions, thus involving members in the decision you are going to make. I don't think anybody's arguing with that. Becomes just a bit to give you and us reassurance, doesn't it? That's all I'm asking for in that regard. That's all I'm looking for in that regard. I don't think I want to push it any further than that.
Yeah, and I'll just reiterate, all I want to know is what is happening, rather than find out it's already happened and we have a problem. At least flag it up a little bit early, but I don't want to get involved in making any decisions. That's not my role. Councillor Faulkner.
Yeah, thank you, Chair. Actually, I'll just throw in a little one on the last one before I question, which is I'm still not entirely sure why we, as a Audit and Accounts Committee, handled Treasury Management System and the Statement of Accounts, yet the budget process and the performance monitoring is scrutiny in the performance panel. So, however, I'll just throw that one in and let it.
But having thrown that one in, it is something that we have raised several times before and been told it's not part of our remit, it's not part of our terms of reference. Well, I know everything is being looked at the moment for post-May next year. Carry on.
We need a new constitutional working group. However, And the real question was a detail one, to get back to detail, was just, do I recall a while back, we exited absolute return funds because they were extremely poor performance, but I know we've now got £15 million worth.
I don't think we ever exited them.
Well, I thought we got rid of our investments and put them somewhere else.
Sue, can you comment on that?
So we constantly review our investments, obviously, and when they come to once they expire, effectively, we look at what the appropriate next investments are. So it's not that we don't have absolute return bonds. It just depends on what their returns are offering us at the time.
But did we come out of them completely and go back in?
No. Not that I'm aware of. Obviously, that might have been before my time.
No, I think we just continued to hold them. I think we commented on the
yes.
performance. Any comment, Graham?
No, it was just, I thought under the previous regime, we did exit them. I mean, it's not a big point, but because at the moment, everything is on low return. So the difference now is probably somewhat less than it was a year or two ago.
No, I think with the absolute return bonds, we were looking at security rather than high levels of return. As you say, everything's pretty bad at the moment, so they even look good. Okay, report is for noting. We'll note it.
No, sorry, Mr. Chairman.
Oh, sorry, Anneli. Yes, your hand is up.
My hand was up. I apologise. Okay, so don't worry. So a couple of things. Obviously, the markets have been extremely volatile. No one could have foreseen it. However, there are a couple of things that I wanted just to understand a bit more. I don't. When I looked at the glossary of terms on Treasury Management until the 27th of January 2020, we didn't have property funds. So whilst Sue has advised that we had already approved these funds per se, I am probably being very stupid, but I have no recollection of us having a discussion about adding property funds into the permissible group of funds that we as a committee were prepared to invest in. And I say this because, as fellow members know, I have been very concerned about the fact that Basingstoke and Dean Borough Council has been extremely exposed to the property market. And we had a commercial real estate investment portfolio, and then we had this investment portfolio. And I have to say that personally, had I known that we were considering a property fund, I personally would never have agreed to it. Obviously, it wouldn't be up to me, but I would have at least said that in view of the fact that we're already have an enormous exposure to this sector, why would we then be converting investment fund instruments into the same risk and just doubling up on risk? So my first question is, when was property funds as a sector permissible under the Treasury Management strategy added? Because when I went back through my reports, it seems to have been added in January 2020, but I'm very happy to be proven wrong. Secondly,
well, we can answer that first question before you carry on.
Okay, yeah.
So as it's under your delegated powers.
So in terms of the Treasury Management strategy, I'll have to look back the previous years to see when it was first introduced. Obviously, it was already as part of the, certainly in the February 2019 Treasury Management strategy, it was approved. I can go back and actually have a look at what point it was added into the Treasury Management strategy, but it was an approved investment instrument that we're allowed to use. Obviously, the first time we've decided to use them was in January 2020, with the decision being made in November 19 that we would invest in this particular fund. In terms of my Section 151 officer statement that goes into the annual budget report, one of my concerns was that whilst there's a lot of reliance on direct investment in property, which is, in my opinion, is linked to how we're currently looking at the property investment strategy, that we're probably at the limit of what we want to invest directly in property. We still need to look at the diversification of our overall investment funds for Treasury management purposes, to try and ensure that we have a spread of different risk, yield and security. And one of the things we looked at was the property fund, because of the fact of its continued high income return, which obviously the report details that it's actually maintaining a very good level of return throughout the crisis. But it's actually significantly less risky than direct property investment. So in terms of making sure that we make our capital work for us, with a number of our previous high earning investment returns drying up in the market, one of the things we had to look at was, along with our Treasury management advisors, is how could we diversify our Treasury investment activity. And one of those things was looking at the CCLA fund, which has been in existence since 1972 and has continuously given excellent returns on revenue income. So, and actually one of the things that the report notes in terms of the benchmarking that we've had back from Arlene Close is it's one of the reasons why we're maintaining we're one of the higher performing councils in terms of our overall return on investment, because of the diversification that we have, while still trying to protect a low risk type portfolio. So I will happily go back and try and find when it was first introduced into Treasury management strategy, but it was definitely there in February 2019, because that's what allowed us to operate within that strategy in terms of that investment in the first place.
I can remember it coming in, the first investments being made. If you can minute that a concern was raised about the over-reliance on property and property funds, just so that there is a record of Honolly's comment.
Following along from that, so somewhere I read that it had a did they stop them? What happened in March? Something happened to the CCLA property fund and nobody was allowed to take their money out. Is that correct?
So in response to COVID-19, this wasn't the only property fund. Property funds generally closed their books effectively, obviously in response to COVID-19. That's obviously situation has now rectified and sorted itself, and people are still able to purchase units now in the property fund again. But of course, it's only available to local authorities. It is the local authority property fund and is managed in that way. So you're absolutely right, Councillor Cubitt. They did effectively close the fund, but that was not an unusual practice for all property funds as a response to COVID-19.
Okay, so just a couple of things then. So in January this year, 4.4, you stated as the Chief Finance Officer that whilst this holds higher risks than other Treasury management activity, it has a significantly higher yield, but at less risk than direct property investments. That was your evaluation of the 10 million. When we went in for 10 million, did we always know that the value did it drop in value? Because you made an unusual statement during the conversation earlier, which implied that when we invested 10 million, we knew it was going to be 9, which means that it's got a weird structure. Did I hear you right, or did I mishear you?
No, you're absolutely correct. So one of the reasons why you invest in a property fund over the longer term rather than for short-term investments is that we had to recognise that we would be looking to keep this investment for at least 3 to 5 years. The expectation is within the first 2 to 3 years that you effectively recover the change in the value of the units that are on purchase in terms of that purchase cost. Obviously, over that period, you recover a significantly higher income return annually. And therefore, by the time you think about potentially passing the investment on in 3 to 5 years' time, you would expect the value to be at least what it was worth when you purchased it at £10 million. And I think it's quite interesting in the report, you can see that actually whilst at the end of March, the value was 9 million, the valuation has changed slightly because of COVID. But if you actually look at the chart in 6.4, all the valuations have massively increased again over the period of the year. So it was the valuation at the end of the March was significantly impacted throughout March, as opposed to its valuation immediately beforehand. And all of our property, all the funds that are actually based on a valuation have all significantly started to improve again.
Except the CCLA one.
But the CCLA one is starting to come back up again.
Okay, and then just finally, and this is something that I'm asked about today, and so in 24th of June 2019, 7.10, it said the performance of externally managed funds are subject to a twice yearly report and analysis by KPMG Investment Advisory, and this is presented to members of the Audit and Accounts Committee. Now, I've been advised by Ellie that we have decided not to use KPMG, that we as Audit and Accounts have not been presented with any report on our externally managed funds, and that going forward it will be done by Arlene Close. I have to register, Mr. Chairman, that I am not happy with this response, and I am not happy with this response because Arlene Close advised us on what to invest in. So it's like asking the right hand to evaluate what the left hand has done when the right hand has told the left hand what to do. So I have to say, I don't know what other members feel, but I would like to see the report and analysis by KPMG as we were advised in June 2019 on our externally managed funds, and I would like to see that at least once a year, and for some reason we haven't seen it.
Sue, that's obviously aimed at you.
So I challenged the reason why we were getting, so Arlene Close mark our homework, and it seemed that we were then asking KPMG to mark Arlene Close's homework. And KPMG are charging us £17,500 a year to effectively tell us what Arlene Close are already telling us. So my understanding is that the reason why KPMG initially were doing that analysis for us, because it was actually based on funds that they had initially recommended for investment, and therefore they were asked to just follow up. So actually what they were reporting on was the funds that they actually recommended we invest on, not funds that Arlene Close asked us to invest on. What we noted was that the piece of work that KPMG are doing, Arlene Close also do for us, and therefore we were paying for it twice, with the information being provided is in terms of exactly the same recommendations and findings. The procurement of that contract came up again at the same time as the Arlene Close Treasury Management Advisor activity, and actually we managed to save £12,000 on the fact that Arlene Close will produce the same report for us as KPMG, and it's not about segregation or independence, because Arlene Close are our Treasury Management Advisors giving us that independence, and it's extremely unusual to pay another firm to actually then give us advice on the investments that they advised us to and recommended.
So it sounds as if it's no additional assurance, just pure duplication.
Yes, and obviously Arlene Close will bring back that separate report so that you can have the same specific information around all the investments. And obviously the other problem as well is that the previous provider of KPMG are no longer doing it as part of KPMG. And they're splintering off into another group, and it didn't seem a prudent use of council's money to pay for the same activity twice.
Okay, so I have two supplementary questions, Mr. Chairman. Did Arlene Close advise us to invest in the CCLA local authority property fund?
No, we went to our own discretion in terms of trying to understand the activities that were available to us. We sought advice from Arlene Close in terms of whether it would be a sound investment to invest in the CCLA. Obviously, because the CCLA is a local authority property fund, Arlene Close are very knowledgeable of the fund, and actually gave us all the information we needed to be able to make the decision.
So did CCLA pitch us without Arlene Close involvement then, you're saying?
Yes, yes.
Okay, but Arlene Close works almost exclusively for local authorities, so they go hand in hand.
They do work for local authorities. I don't know who their other client base is, but obviously they have a significant number of local authorities that they advise.
Okay, and just finally, is there any reason therefore why we in audit did not get the report that we should have got evaluating the external managed funds as per instructions in June 2019?
So I can look into that. I don't know the answer to that offhand. Obviously, Phil Hood took the decision under contract standing orders in February this year. So I think you've raised the issue, why did we not have one in June? And I will follow that up for you.
I mean, I suppose my point is that you took the decision to cancel the KPMG, but that doesn't negate the commitment that was made in June 2019 that we as a committee should be presented with a report that evaluates the external managed funds.
No, absolutely not. So Arlene Close are doing that piece of work at the moment, and that will come back to Audit Accounts Committee. I think we obviously clearly need to note that you want it half yearly, not annually.
Well, it wasn't that. It's just to respect the schedule that was the one that we believed was in existence, and which for some reason we haven't fulfilled. So we're out by 12 months now.
So it is coming back to Audit Accounts Committee.
All right, Ellie, if you can make sure that's noted on the tracker, and we will certainly pursue that one. Okay, anybody else got any comments on that? Yes, Paul Harvey.
Forgive me, Chair, I'm being either very, very thick here, and I apologise, Sue. Did you just say, did I get it right, that Arlene Close are advising us if we want, just to use my analogy, to buy the car, we buy the car, and then they're telling us, do you know what, that was a really good purchase about a few weeks later? Is that kind of the situation that we're in? Because that to me just seems strange. Maybe I've misunderstood, and I apologise if I have.
You're muted, Sue.
Mute, Sue, sorry.
Sorry. Yes, so obviously we meet with Arlene Close on a regular basis. We discuss with them our thoughts and our processes. We discuss with them opportunities that may have been presented to us. They give us their thoughts and advice, but obviously we then go away and make those decisions. The piece of work that KPMG did, for example, is purely to come back in terms of the overall performance of various investments. So from Arlene Close's point of view, it's a factual response in terms of how are those, compared to how we thought they were going to perform, are they performing as expected? So it's not necessarily a case that Arlene Close have said you need to buy a Honda or any other brand of car, and therefore then come back and say, even though it's a terrible car, we think it's fantastic. That's not part of the deal. It's the fact that obviously we utilise, because we think it's good Treasury management practice to have an advisor in terms of the activity that we wish to undertake. It would certainly not be a conflict for them to actually then tell us how the various investments that we've decided to do as a council are then performing.
So are you saying it's an absolutely totally objective second stage, if you like, of that process?
In my opinion, yes.
Okay, thank you.
Okay, Councillor Cubitt, you've...
Sorry, I just want to push Sue a little bit more on this one. You said something very telling, which was that Arlene Close say we're a wonderful council, we have amazing results because our investment portfolio is diversified, and that this element of the investment was a key part of the diversification of our portfolio. Did Arlene Close say that we needed to diversify our investment portfolio to include some property investment?
No, they didn't. They advised us in terms of, I asked the question around property funds in terms of my activity as 151 officer and keeping an eye on the market and actually having been responsible for Treasury Management. At one of our regular meetings with them, I raised the question in terms of, did this suit our normal Treasury Management strategy? So I asked them the question rather than them bringing it to us.
Okay, well, thank you very much, Sue. But as I said on record, I am concerned that what it did was double up our, not double up obviously, because we've got a 300 million commercial real estate portfolio and we had a 100 million investment portfolio, but we now have 10 million in a fund which on a multiplier basis, I think represents a greater portion and a further increase in our exposure to one sector. Thank you.
And I think we've already noted that for the minutes only. Is there anybody else? Okay, we'll note that report and move on to item 10, Local Authority Financial Reporting and External Audit, Independent Review, the Redmond Review. Thank you, Sue, for the report which I asked for. It is something that's coming down the track and it will impact on 2021 if we look at some of the recommendations. Sue, can you tell us something about it?
So I'm going to hand this one over to Suzanne, who will pull the report together.
Thank you. What I've done for you is simply to pull out the high level points. This report is still out for consultation, so as yet we don't know exactly what the outcome for it will be in terms of which things will impact on the council. What we set out for you at paragraph 5.1 is that if it goes as suggested in the Redmond review, there could be an increase in audit fees. And I know that question was raised earlier on, and every year, obviously, there is a truing up. So the idea behind the finding was that there's a view across the professions that perhaps there's a need to put a bit more into audit in order to get out what it is that's required and for auditors to be able to fulfil their requirements. There will be a requirement for the auditor, and that's the external auditor, to present an annual report to full council. And again, that will be the presentation of a report. Consideration is given to the appointment of at least one member, independent member of an audit committee. That's consideration, that's not you will have to. Some councils have already done it, and that will be a matter for consideration in due course. An additional requirement to produce a further statement, which clearly will have an impact on officer time, and also likely to be a revised deadline change. So it was brought back quicker, sorry, it was made a shorter time scale. Now they're talking about making it slightly longer again, potentially. So again, we will see where that leads us once the consultation period is completed. From my memory, I believe consultation runs for about the 8th or 9th of December. I can't remember the exact date off the top of my head, but it's before the 10th of December, that I do know. So with that, Chairman, I will stop.
Okay, Suzanne, it's out for consultation. Presumably we have been consulted. Do we have a response?
Well, clearly anything that might be said this evening, we will take a note. As yet, we haven't put a formal response together. Some thoughts are clearly buzzing around in terms of what we might say, the bits that we might welcome, certainly from a professional officer point of view. But if there are comments the committee would like us to include, then be pleased to have them.
And this is our opportunity to make the pitch. Councillor Harvey.
Thanks, Chair. Just quickly, well, I absolutely love the idea of absolutely having to have an independent member of this committee. You've got two, which I love at the moment. That's obviously not what it means. Just thinking through the suitably qualified independent member of the audit committee, do we have any idea who decides, or has there been any indication who determines what is suitably qualified, and is there a selection process that's been floated, or is it just out there as an idea, and were it to be taken forward, then we might get some more information later, do you think?
Well, I can speak from personal experience here. When I worked for the City of London Corporation, we actually had 3 members who were independent of the corporation appointed to the committee. And in line with all other organisations, you advertise for them. And there are people who may have backgrounds in finance, whether it's local government finance or other areas of finance. And the 3 who were appointed at the City of London, one was a past president of SIPFA, as it happened. One had worked in the city. In fact, 2 of them were past presidents of SIPFA, and one of them was a former very senior auditor and had worked for the NAO as well. I understand Islington Council are also doing the same. So it's that nature of qualification, but I can see that Sue wants to say something as well. So yes, they're independent of the organisation, not independent in the sense of members who are independently, not
I
in a
think we're
different
talking about the independent members as they are on the standards committee. But actually finding somebody who's suitably qualified that hasn't got local government experience, bearing in mind that the audit recommendation is that the external auditors are properly trained, is a bit of a worry. Sue?
So I think it's worth noting that obviously the concern is that in some councils, and I wouldn't necessarily say that's true of our Audit and Accounts Committee, there are people that are not suitably astute, shall we say, in terms of being able to sign these off. So this is really to help give some assurance that obviously if the Audit and Accounts Committee need further support in terms of signing off the audits, there's somebody appropriate for that. So I think that's why it's for consideration rather than an insistence that you must have an independent person. It really comes down to whether the Audit and Accounts Committee feel that they would benefit from that additional support in terms of signing off the accounts.
I'll tell you the reason why I raise it was having gone through, and others around this screen this evening have also been through this as well, when standards was completely thrown up in the air and it fell back down to earth, and we found ourselves with imposition of being imposed on us how members of that standards committee independently of members of the council were going to be chosen. We found ourselves in a position that former councillors suddenly became standards committee members, and there was nothing we could do about it. It was the nature of the process, and so on. So I just think if it was going to be imposed on us, that's one thing, but if it's going to be a consideration that we as a council might decide to do something of our volition because we think it's the right thing to do, that's a totally different thing.
So I think in terms of the consultation, we still think it should be something for the committee to decide. I have a worry that some members of the committee are less well trained than others, and there may well be members of the committee who would benefit from an independent advisor. Any thoughts? Councillor Gibbett?
Mr. Chairman, just out of interest, it wasn't clear to me, would these independent members be paid? Because if they were of the calibre that Suzanne's mentioning, I can't foresee many residents in our borough offering their time and not being paid to provide independent position on the committee.
Could end up being more expensive than the external audit. Councillor Faulkner.
Yeah, thank you, Chair. Just to summarise my thoughts, this is a slippery slope to the abolition of elected representatives at a local level in a democratic environment and replacing them with agencies that kowtow down to central government. Because if it recognises that councillors are unable to handle complex environments, then where does it stop? Housing, strategy, etc., etc.
That's an interesting comment. Councillor James.
Yeah, I must say I'm quite attracted to the idea. I'm going to an education advisory panel, which I sit on at Hampshire County Council. And if you ask any of my teachers, if any of them are still alive, I probably didn't really apply myself at school very much. I did lots of overtime. They call them tensions, but we'll leave that there. Actually having an expert, when I go there, there will be 3 teachers. There will be 4 teachers, one from primary, one from secondary, one from religious schools, etc., to get a balance and get some expertise about how our policies really impact on the ground, etc. We are very fortunate, I think, on this committee. Certainly in previous years, I remember Councillor Parker and Councillor Watts both sat on this for the Lib Dems. They've got Councillor Watts loved the detail. Councillor Parker worked in finance. They were very competent and capable at it. Actually, right now as a group, we don't have any accountants or people that are involved in financial investments. Very fortunate in terms of Councillor Cubitt, who often on this committee, despite being part of the administration, is probably more of a thorn in their side than the rest of us put together, which is wonderful because it helps us. There is some clear expertise, but I could see in a time when that we may not have that expertise. It's, you know, whether it's something where we look at the committee at the start of the year and go, actually, let's drag people in because we need them, or whether you actually automatically have 2 members, and we wouldn't be paying them. It would be a lay member. Some, you know, some people like to give time to the community because they want to help out. Most of us generally do this because of that reason. We don't do it for the money because we spend it all on printing leaflets and delivering them. So I think it's not a bad idea in committees such as this to have experts on tap to support the committee through the process. I think even if it's sort of, you know, obviously Councillor Cubitt, the longer she spends not in finance, the more her knowledge and experience becomes less relevant. So actually, I think it's good to have an expert appointed for a year by the committee. I think it's something the committee perhaps should be selecting themselves or agreeing to. But I think there's some value in having an expert. I say, we possibly don't need it at the moment, but in future years, who knows who's going to be on this committee?
I think at the moment, the expert advice we get is from officers, but that is possibly marking their own homework.
Exactly. Someone's got to scrutinise it. And if we've not got the skill set as a committee, actually having that extra person who doesn't want to be a councillor, doesn't want to sit on EPH or anything like that, but has a particular expertise that would benefit the committee in offering that level of scrutiny of officers, that's got to be a good thing.
As with the Standards Committee, that is the only committee on which they sit. And I think if we did have an independent member, there'd probably be a non-voting member. So they would be there to advise, not necessarily to be involved in any final decision. Councillor Taylor, welcome, Kim.
Hi there, just unusually, I haven't said very much. Actually, I think this is a really good idea. And if we cast our mind back quite some time ago, we did our own little self-assessment of ourselves, didn't we, as an audit committee, and we had external help with that, which I think was really good, and lots of really interesting things came out of that. You know, for example, that we had absolutely no idea when we formed a committee whether any of us had any suitable skills or not, because we don't undertake any kind of skills assessment. There were lots of sort of gaps identified in what we did, especially in terms of being very robust about, you know, securing statements in respect of value for money, and being trained and understanding what our remit was, and all those sorts of things. And a lot of things came out of that, which actually are reflected in this. So actually, I don't think it's that bad an idea. I think having proper training for people is really good. And I think and having some external expert that members can call upon, you know, where they need to, and also a proper planned regime of training for members it would be beneficial, because the reality is, whether we like it or not, we are pretty here today and gone tomorrow. You know, who sits on this committee to a certain extent is at the whim of the electorate. So I think we need to bear that in mind. And so I would agree with Councillor James that having, you know, external expertise to support committees is a pretty good idea. I don't feel that threatened by it, and I think probably because of the nature of this particular committee and its role, it's probably quite important to do that. So I feel quite supportive towards this, really.
Right, Councillor Tilbury.
Hello, yeah. I mean, I'd agree with what Councillor Faulkner said. I mean, I was on the board of a housing association many years ago, at that time, when they had councillors, tenants on there, and they had independent members on there. And in the end, all the independent members on there all came from other housing associations. So you just tended to get more of the same. And gradually the councillors were thrown off, and then the tenants were thrown off. And now they're all full of other housing association ones. But the other thing is it's very much talking about finance. In fact, at 3.3, it refers to governance, you know, to support elected representatives in scrutinising local authority finance. Well, if you look at a lot of what's on our agenda, it's nothing to do with finance. And that's not the situation that used to be when I first came on this committee, or its various iterations, you know, 18 years ago. It was much more financial based. A lot of that has disappeared, and you'll know, Roger, because you've been on here probably nearly as long as me over the years, on and off. And we've always been quite lucky that we had quite a number of former accountants or current accountants or whatever, people who actually understood that, and they tended to gravitate towards committees like this, or their groups put them on there for whatever reason, or company directors. So we have been lucky in that situation, but you could end up in a situation where you had nobody who actually had any real qualifications in finance. But I mean, I would be concerned with that, because the trouble is, if you look at all the recommendations, we're going to end up paying the auditors more, employ more independent people. And one of the other things that has changed, when I first became a councillor, we were paying nearly £100,000 a year in audit fees, and that's now down to about £40,000. Well, I can rapidly see this heading off in the other direction. And of course, there are a lot of councils that probably could do with someone to look at their finances. And I don't think we'll go down that route tonight, but we're not one of them. I think we've always been pretty good. There are some councils that really need someone to look at
the
them.
independent member. The independent member is to advise. Sue.
So if I could kind of bring the focus back slightly in terms of, this is purely to do with the external audit of the accounts, which is obviously once a year. So obviously this committee is more about process generally, and obviously scrutiny is more about other items of it. This is about the annual statement of accounts. Obviously the external auditor, to some extent, apologies, Councillor Gavin James, in terms of are marking our homework. So we're not actually asking for this independent member to mark the homework of finance, because that's what the external auditor is doing. I think this is in part to help the committee make sure that, for example, the conversation around the audit plan, in terms of understanding what we want to make sure is in the audit plan from a member's point of view, they would be able to help and advise in terms of if there were concerns around various elements of the accounts that you want in the external audit plan. So they're not necessarily intended to effectively mark the homework of officers, because obviously, as Councillor Tilbury has already noted, we're already paid the external auditors in terms of the relevant codes of practice. Are we actually completing the statements correctly? This is more in terms of support, in terms of asking the right questions in the first place. So, and obviously the external audit is only once a year.
But covers several meetings, as we've found this year. The others we talk about increased audit fees and the necessary for skills and training of the external auditors, which does imply that in some cases we're getting an audit team that don't actually understand local government, which is a big learning curve to be doing when you're actually doing the audit. The presentation of the audit report to full council rather than just to audit and accounts. Would full council get the opportunity to ask questions of it? Or is it just a straight presentation? We do at least get the chance to interrogate the auditors at length to find exactly what is happening or hasn't happened, as Omni has pointed out. A standardised statement of service information and costs. I think that's probably a good idea, to actually look at where the money comes, where it comes from, where the money goes. Very much by the activity rather than as it is at the moment, where it's just lost in the detail or lost in the summary. Revised timetable, we've always said that July is a push. So certainly pushing it back to September sounds like a sensible idea to me. And audit fees, well, yes, they have come tumbling down. And the auditors have been the first people to scream like mad that they can't do a decent audit for the money they're getting. So I think we've got to be realistic about that. Suzanne, how does that grab you as a few comments?
That's very helpful. Thank you, Chair. Together with Sue, we will put some thoughts together to put a response in on behalf of the authority. And if we could see a draft of your response, either at the next meeting or preferably beforehand, before it's submitted. So if you have any comments. Sue and I will work through that and get back to you for sure. Thank you very much. Councillor Cubitt. Nope, sorry, not. Okay, thank you very much for that. We'll note it and move on. Item 11, the fraud update, protecting the public purse. And now I do have to wake up Mr. Gundry.
All present and correct, Chair. Thank you, Chair. This report is the usual format that's presented to the committee, and it just informs the committee of the work that's been undertaken so far this year in terms of protecting the public purse. I believe the report stands for itself, so I wasn't going to add anything further than that and just ask the committee to note the report if they would. Thank you, Chair.
Any hands going up, or can we note the report? I think we can note the report. Thank you very much.
Thank you, Chair.
Thank you very much for your patience.
A pleasure.
Chair, it's just a suggestion, but given how quick that was, and poor Paul's been sat here for 2 hours, I wonder whether in future times we could push him to the front of the agenda. And I appreciate he's at home anyway now, but well, I assume he is, he could be anywhere. But I mean, obviously, he's been sat there with his dinner going cold, waiting for his moment to say, can you just approve this? And we just have. So I wonder if we could jiggle him around next time so we don't have an officer waiting here all night.
He's been playing Candy Crush all evening.
Yeah, Chair. Thank you, Chair. Thank you very much for the comment, Councillor James. It is appreciated. However, I do have a role of the Chief Internal Auditor, so it is a meaningful committee to me, and I am available to ask questions if there are any that come up. But if you want to put my papers at the front, that would be greatly received. Thank you.
And don't worry, he'll be doing the report on the effectiveness of the Audit and Accounts Committee. Agenda item 12 is our usual report on the viewing of social network sites. And once again, internal audit seems to be the biggest culprit. But it is all standard stuff, which I think we're perfectly happy with. Any comments? Just note it. Right, general data protection regulations, notification of a data breach. Anne, thank you for your patience. You're muted.
Sorry, Chair. This was a single breach that has taken place since your last meeting. It related to a mistake in the system permission when an auditor was doing an audit. There was no data actually leaked from the workplace, and no data was disseminated, and therefore the ICO took the view that they didn't wish to take the matter any further. Action is being taken internally to make sure that the processes and procedures are looked at so that this can't happen again.
Was it something that could have been prevented in the first place?
I think human error, it always occurs, doesn't it? You know, with the best systems in the world, human error will occur. The important thing is to have procedures in place that when these things happen, you know, action is taken to make sure that the data is contained and not breached any further. So thereby, you know, reducing the risk to the authority from the ICO taking action.
Mr. Gundry, you wish to speak?
Yeah, thank you, Chair. It's just a point of clarification, and just wanted to highlight it wasn't a data breach by a member of my team with internal audit, as it could be taken.
Was it something that internal audit picked up?
It was a result of an audit request that was made, and it was the actions as opposed to that created the data breach.
Okay. Anybody wish to comment? Noted, and thank you. So our last item, agenda item 14, the work programme. Ellie, I have told you before, please do not tell me what my work programme was at the end of the meeting. So telling me what we were supposed to be discussing in November is probably a waste of paper. But I would have preferred it if we had actually rolled it forward to a rolling annual work programme so we know what reports are due to come up in the future. Now, I realise that with all the changes likely in May, it may be a bit premature to actually say what's going where. But I think in future, the rolling annual programme is probably the better way to do it. Anybody got any comments on the work programme that's down there? We know that we are going to be looking at our new managers in January, which is good for the property side. Apart from that, anybody want to add anything to the work programme? Very sensible. Oh, Sue, you want to add to it?
Sorry, just obviously say that we've obviously discussed previously in the meeting adding the report from Arlene Close on the investments and bringing that back to committee.
Okay, Ellie, note that. And I think that leaves us exclusion of press and public. Don't worry, we haven't got anything to discuss under item 16, so that's not necessary. So I will close the meeting at 8:45.